Well, at least at the moment, it's still holding up. Hello everyone, how's it going? Another day, another trade, and another Palantir video. So of course, today we're going to keep talking about Palantir because a lot of people are searching about it, not that much answers to all our questions, to be honest. And hopefully with my analysis, we're going to have a deep dive into what Palantir is. Is it really a good stock for you? What it's really about, and its ups and downs. So before the video continues, I just want to say thank you very much for coming by. Hope that you're going to enjoy your stay and that you're going to have some takeaway from every single one of my video. Yes, I do follow very often Palantir on my channel, and it's not the only one, but right now it's like my main focus. I think it's a very interesting stock to talk about, and it's also a pretty interesting stock to observe because whatever signals that it has can be broadcasted and be projected to a good chunk of the market, at least the speculative portion. So without further ado, let's jump right into it. So in today's price action, like I said in the beginning, at least things are still holding up. And that, to be honest, is probably the most important message to take away, because it's not collapsing, and even though we're not sure whether the sell-off has bottomed, every time that it bounces back from like the $20 and $21 region, it definitely helps. It definitely helps the message. It helps about like it definitely helps about the narrative that Palantir is the stock of the future. It's gonna sit on a rocket and go to the moon. Okay, whether it's gonna happen like that or not, it certainly helps that Palantir doesn't dip all the way back to like sub 10 levels, even though, and there must be a lot of emphasis on this point, even though it's still possible, even though it should not surprise us, even though if it were to happen, we should not be spooked, because there's zero guarantee in the market at all times. Okay, we only have educated guess, and in the case of Palantir, the consensus is it's a good company. It's a company that can give us a lot of promises, that it can fulfill because it has the cash flow, the brain power, and arguably the leadership to achieve it. Like, it's not a company that pretends to be a Silicon Valley snowflake. They might be the kind of company that will stop at nothing to achieve their goal. Of course, a goal for a business is, of course, to generate profit. That is the mission of any and all for-profit organizations. But in their cases, I think that they are a privatized portion of like signal intelligence, at least, research and projects. Like, they try to analyze everything that travels in the forms of signals. May it be text messages, data, information of all kinds. And once they aggregate these together, they can make sense of it, and they can make sense of it for the organizations that employ them. That is the goal of Palantir, or at least the original mission of Palantir. And nowadays, people are not just satisfied by like this original mission, they also want something more. And in the case of Palantir, they were able to like seize the momentum of the AI trend and to become very popular, very big on that as well. So the fact that Palantir's price action is still hovering around 21 and 22 may start giving people hope that whatever sell-off that we've been experiencing in the recent days might be coming to an end, and they wanna maybe move like away from this kind of dynamics. But just a few words about maybe like what has been happening to Palantir in the past few months, and why people are almost like, why the stock is almost caught on fire. So initially, because Palantir went public when the stock market in general was very hot. We were talking about an era when, thanks to Tesla and Elon Musk, we thought that every single meme stock, every single EV stock, the fintech, the the wacky ideas that are really like traded on the market are going to be able to transform our economy, and that they're going to be able to like um how can I put this, that they're going to be able to carry our collective fortunes in the future. That has been the ongoing theme for the past few years. We collectively want to believe, so that belief became the reality. And eventually, of course, the market finally collapsed, and then so did our dreams. But to experience those few years was something quite extraordinary. Um, and then once the market has collapsed, Palantir collapsed with it. You know, a part of it was because the speculative bubble was no more. The other reason was because people were assuming that the interest rates are going to stay rock bottom, forever and ever and ever. That did not happen. Unfortunately for the stock market, very fortunately for people who are on fixed income. And I would say, I wouldn't say that it's very fortunate, but I would say that at least it was that for the people who have to live off a salary. Because if you've seen anything in the news over the past few years, the first thing is that a lot of companies, like good companies providing very good salaries, have been shredding off their workforce. And they noticed that, they overhired a little bit during the COVID years, and then they wanted to remove that overhiring phenomenon. And sometimes they overhired a lot. So people who thought that they're set for life, they're good, they're employed by all the Silicon Valley titans, they were let go. And that broke a lot of people's their assumptions about this world. And that was something that was still very difficult to wrap our heads around. And the other thing, of course, was the rampant inflation. When food in your grocery went up by, 30% in cost, it basically means that your money just lost that much in value, if not more, if you need to buy a house, right? In many regions of the world, the real estate market went into turbocharge, but not exactly for the good reason, because people want to minimize the consequence of inflation. So the asset prices of many, many, many assets have surged. And because of this, the interest rates have gone up. And because of that, the stock market tanked. Because we need hot money, we need money to rush into a certain sector in order for the sector to flourish. It's a bit of a catch-22, really. So basically, what the whole thing is about is that you need money to make money, or rather, you need money for a stock to appear successful. And in this case, for Palantir, when it first started to trade, even though part of the reason is because hype, but the other kind of reason is because people were assuming that the interest rates were going to stay low forever. So a lot of people would be motivated to keep their money into the hot circuit, the equity one, and never the savings account to collect 0.5% for the rest of the eternity, right? Which, by the way, was one of the reasons why stablecoins in the crypto space was very popular. When your bank gives you 1% a year, but the crypto staking gives you 10, 15, 20% a year, what are you going to do? Are you just going to say, you know what, it's too risky, I'm not going to collect like the additional 9.5%? Most people won't do that, right? Most of us would prefer to just wing it and to maybe risk it. And for a period of time, they were right, until it's not. So in 2022, there was the war. It began and it collapsed the market. And in June, the crypto bubble collapsed as well. Initially started by Terra, but not just Terra. I think that the whole ecosystem was long due for some major correction. But of course, today we're talking about Palantir. So in the case of Palantir, at one point in time, it was trading below $10. And I remember that the news cycle was just extremely sad. Like every single day, people were posting articles about, is this the end for this beautiful friend called Palantir? Is this the end of our collective dream that CIA overlords are going to not only be the big brother, but make us money in the process? Is this the end of this eccentric CEO saying in Davos that every single Silicon Valley unicorn is a useless parasite? I mean, to be fair, he might be right to a large extent. I would say that a lot of Silicon Valley is useless. Their purpose is to participate in this collective grift alongside with VC, so that the market at large can prop up their perception of how valuable their companies are. But it doesn't mean that their companies are truly that valuable. So there was also that. So this is why during that period of time, it was very difficult to give a lot of, like support and fuel the hype for a stock that was not getting any sort of following. And then there were two events that finally occurred. The first one, I was able to see it. It was the eventual profit of Palantir. The fact that Palantir ended up having the fact that Palantir was able to finally turn a profit from its own operations. I saw that coming because they were having a positive margin, like gross margin to begin with. And a gross margin means in order to get that business, it costs them less than what this business brings in. So this means that it's only a question of scale and I would say time for Palantir to eventually become profitable. If we assume that there's enough space for Palantir's operations to keep expanding, which it did have. The second reason was a bit more, how can I put this, speculative and surprising. The fact that Palantir, thanks to ChatGPT and the popularity of AI, they decided to go into the AI space. And this is when their title really took off. Like they went from 8 to 15 for a number of months. That thanks to their own fundamentals, and then from 15 to 25 thanks to AI, thanks to speculation. So we're not sure how long this fever dream is going to last, if that is a fever dream at all. On the other hand, what I can say is that there's always the risk that you're going to buy something very expensive without any sort of good reasons. Okay, so let's say if Palantir is hitting 35 right now, you think that it's going to hit 50. Well, if you buy in now, what happens if it goes back to 20? Are you going to fire sale and take a huge loss? Right? This might happen if you took a position that you shouldn't have been taking. And this is why I would say that overall, it's a question of timing. It's a question of how disciplined you should be. And it's a question of assumptions. It's a question of conviction, really. So this is a conviction play. This is a discipline play. And it's also a discipline play that should include a lot of patience in the concoction. So what I mean by that is Palantir is not a stock that people should trade, but it's a stock that people should invest in. And it's a bit, I would say that, maybe this goes against the collective opinion of the money managers on Wall Street, because at the moment, Palantir has its majority of the shareholder base as retails, meaning the institutions, despite all the glitters around Palantir, they kind of hesitate to go in. Probably because, fundamentally speaking, they think that Palantir is a little bit expensive. Yes, it's having good results. Yes, it looks pretty cool. Yes, it has interesting projects and so on. But does it really mean that Palantir is worth the price that it's currently at? The multiplier is quite high. In fact, a lot of Silicon Valley, or rather tech stocks, may have this issue. Like Tesla does have this issue. Nvidia definitely has this issue. So it's not necessarily a question of an absolute limit of what is the maximum, multiplier a company should have before people say, oh, you know what, I'm not going to go into it. But also a question of perceivable momentum. So, Nvidia is worth $1 trillion, but see, people are like, yeah, but it's Nvidia. You know what I mean? It's a company, one of the key companies that's going to drive the innovation in the future. This may or may not be true, but it's certainly believed to be true or assumed to be true by the rest of the market. This is why it's a self-fulfilling prophecy. Are EVs going to take over the world? Well, we don't know. We didn't know back then. But you know what? We collectively pitched into that pool so that EV from 2020 to like 2022 was a very popular market to be in. And you're almost guaranteed to make money as long as you have exposure in that sector. That was how crazy things were. So this is why it shouldn't be a surprise, to be honest, that Palantir is like it shouldn't be a surprise really that Palantir is having a good time, but also a lot of hesitation, because yes, it has gone up to 25, but does it mean that the narrative is going to stay around forever? So my belief is that yes, it's going to stay around for some time, and it's going to stay around for quite a while, in fact. That AI is here to stay, that data analytics is here to stay. Big brothers are definitely here to stay. The big brothers going private is also here to stay. But see, here's the thing. Changing narrative is one thing, so that is one risk. The other thing is, what if, Big Brother gets sued? It's possible. If some kind of scandal erupts saying Palantir has been misappropriating and mismanaging and misusing in general the data that they have, what kind of valuation, what kind of impact it's going to have on. So right now, the global markets are facing a complex interplay of factors that have the potential to significantly influence the equities worldwide. In this speculative analysis, I believe that the consequences of the global inflation, surging commodity prices, and decline quantitative easing, as well as the rise of inflation rates or interest rates, plus the geopolitical instabilities, are going to play a significant part. The increasing inflation rate has been putting pressures across the globe, threatening the purchasing power, raising the input costs, and impacting corporate profitability. Companies operating internationally may face challenges in managing rising production costs and also to sustain profit margins. Those dynamics could trigger market volatility as investors adjust their risk-return expectations. The upward trajectory of commodity prices, including energy, metals, agricultural products, have been having far-reaching implications for various sectors of the global equities market. The companies heavily dependent on these commodities may experience squeezed profit margins, potentially affecting stock valuations and investor sentiment. The reduction or the end of QE's quantitative easing measures by the central banks worldwide may have resulted in reduced market liquidity. So, this in turn could lead to higher borrowing costs for companies seeking capital, which may also discourage investment activities or will. The elevated market volatility plus the reduced investors' appetite may also continue to occur. Now, the central banks around the world are tackling this delicate situation of balancing the inflation rates with the economic stability and, if possible, growth. Central banks opted for aggressive interest rate hikes to combat inflations. Borrowing costs for companies have been rising, which has also slowed down business activities and also fueling the market's volatility in terms of the equity prices. Now, ongoing geopolitical tensions, including trade disputes, political uncertainties, and social unrests, will inject an additional element of volatility into the global markets. Investors may adopt a cautious approach, shifting towards safer assets, impacting the equities. Additionally, the escalating conflicts may disrupt supply chains, negatively impacting the performance of international companies. Given the interconnectedness of global markets, the aforementioned factors have reverberating effects on the US equities market. Companies with significant exposure to international market may face a lot of headwinds resulting from the economic slowdowns, disrupting the supply chains and the currency fluctuations. But nevertheless, the US market is known for its resilience, and the diverse sectors may attract investors seeking safe havens. So, really, the current landscape is characterized by global inflation, surging commodity prices, reduced quantitative easing, rising central bank inflation rates, geopolitical instabilities, and also ongoing lack of certainty regarding growth. While the US market may exhibit relative strength due to the safe haven status, it's going to remain interconnected with the global economic landscape. For long-term investors, these conditions may offer opportunities to identify undervalued companies with strong fundamentals and international diversification. With that being said, short-term trades should be approached with caution because of the increased volatility and uncertainty. And also, we should be careful when assessing individual companies, sectors, or regions. Alright, so having said all this, my opinion on Palantir, I think it has remained mostly coherent over that period of time. I think that more volatilities are underway, whether it's going up or down, because it has enough reasons to go up or down, right? But overall, I believe that patience is key, and patience will bring us success. And for the time being, I do believe that it's a good time to start and keep observing Palantir. And then eventually, we need to start preparing for a systematic purchase pattern for Palantir. We need to come up with something along the lines of, okay, Palantir may go either up or down. It could go to 500, it can go to 5, right? But as far as I'm concerned, the allocation of capital to Palantir should never go beyond something like 10%. And then I would assume that whatever pattern that will form during the next 24 months is going to be whatever Palantir is going to be in the years to come and the decades to come. You need to like going in, you need to have this level of conviction before you do anything with Palantir. If you're not sure about like the sector, if you're not sure about the technology, then I'm sure that there are other opportunities, better ones in the market for your kind of portfolio. But if you assume that yes, its sectors are going to be promising for the decades to come, then I would say that you can gradually, very gradually, go in over the next 12 to 24 months and to hold that position until, let's say, the position 3 to 5x, maybe 10x. Of course, we can discuss about exit strategy once we get there, because the holding period should at least measured in years.